All right, we're going to give it a shot here. 1-to-1 try to return. 5,000 tick chart looks good. Bouncing off the caution zone here, breaking trend lines on the 1,000 and 2,000 tick chart. I'll give it a shot. The only problem is it went over that level, that white line level. That's a previous stay high-low area, and fell below it. So that's not good. And I said I was concerned about that, but I really, want to take a trend line trade. So here we go. And if it doesn't work, we'll just take our loss. And this is also what you need to understand. Losing is part of the game, and we have to be able to be good losers. That's just all there is to trading. Taking losses when they come and learning from them, really, honestly. All right, you can see I stopped out on that trade. It did come down past the pivot level. Probably shouldn't have taken that trade, but I did. And that first trade of the day is a loss. Unlike yesterday, first trade of the day was a winner. So I'm going to be careful now. We don't want to have more than 3 losses in a row. That's bad for everything and everyone. So now we have to put on caution. Come to think of it, let's look at this. Yeah, I mean, it just really, on the 2000 tick chart, it started to turn green right there. And it just flipped around, didn't it? So that's happens, you guys. That happens. We could have got in over here and it would have been beautiful. So you just got to take your losses. That's all there is to it. Don't be afraid of having losses. All right, there's a fair value gap coming down here in the 15-minute chart. I'm keeping an eye on. And order block level down there. I don't know if you guys are into the ICT concepts or not, but those are kind of helpful sometimes. Keeping an eye on the 30-minute as well, where there's a fair value gap right there. Let's take a look at that, how that works. Somewhere in that area, right? It's popping into that area right now. A reaction area is where price could bounce and reverse, but there's a high 95% probability it's going to do something. I'm going to give it one more shot.
Order filled.
I'm going to give it one more shot in terms of the trend line break being accelerated to the downside. And what you'll notice, this trend line's trajectory it increases right before the turnaround a lot of times too. I'm just going to go for a quick little, a little bit of a profit here to kind of make up for some of the
order submitted
stuff that we lost already. Hopefully we'll be able to get this as a win, a little tiny piece to help the old confidence level, Whatever, we'll take whatever we can. The stop normally goes right under that pivot level, and see if it holds in this area, because like I said, we use multiple time charts, help us out a lot, hitting the 20. All these moving averages are expanding nicely. It is a fair value gap. There are some support levels here. It could bounce. I'm not saying it's going to, I'm just saying it could, and that would be a good area for it to bounce. So let's see what happens here on this particular trade. Hopefully it'll work. Well, you can see it hit 1-to-1 on here for me, 1-to-1. My stop is down here. I entered here, hit 1-to-1. So I immediately go to break even plus 1 tick. So at least this won't be a loss if it does not continue to go up. I could have taken my 1-to-1 target, which I've been trying to do lately, just so I don't have, I can make back some of that loss on the first trade, build a little confidence. Hopefully it'll get up there. It's a good area to bounce. A lot of times you'll find an area that's called a reaction area. A reaction area is where price could bounce and reverse, but there's a high 95% probability it's going to do something. Okay? A reaction area is an area where price can slow down, it can stop, it can consolidate, it can reverse, it can do anything. Okay? Here on the 5,000 tick chart, you see a nice fair value gap as well that matches the 15-minute chart. So what happens in a reaction area is it could be the place where things are going to reverse, but more than likely it is definitely a place.
Order
I'm just
filled.
going to take my profit on that and be happy, because I just want to make back that loss, get my confidence back, and just get into flow of having a win there. But a reaction area, guys, is an area where price is probably going to do something, and that something could pay. That something could be profitable. It doesn't necessarily mean it's going to go all the way back over the top and keep going, but what it does mean is we could get a scalp in that area, we could get a small trade, we can get some reaction, whatever you want to do. So like I said, you see it's coming back down, but reaction area, we found a reaction area looking at multiple time charts, 15-minute time chart, seeing that fair value gap, the ICT concept, pretty nice. It is a 50% pullback probably of this move up, right in the golden zone of the Fibonacci level at a fair value gap, bouncing off the 50 moving average. That's a reaction area. That does not mean that price is not going to continue down. It just means this is an area where price is going to probably bounce around for a minute, that we could probably have some kind of profit. And that's exactly what we did. We saw that reaction area. We got 1-to-1. It came up into some more resistance on these time charts, and we just took it. We don't know what price is going to do. That's another reaction area. That's a good point. From reaction area to reaction area, from one to the other, is a good place to do scalping, buying and selling in between the reaction areas. If you can learn to read reaction areas, move strategies, but they can help with wins to get confidence levels up and to confirm that you're able to read chart patterns, chart structure, and technical analysis. Better at that. So, all right, let's wait for another trade to come along for us. You really can think, oh gosh, this looks like it's going to break out here when you're only looking at the 1,000 tick chart. I was very tempted to get in on that, the break, and it looks like it's breaking out over the top too. It's choppy sideways activity though, and then the way this candle acted right here, it started to go up strong, and within a split second, it just dropped right back down. That is what can shake your confidence in a trade as well. When price activity moves, and it may be the other day, just like price came down really lightning fast, and then it spooked me, and it's eventually it did go up in the right direction. So I'm still learning and watching price action and trying to figure out what's going on myself. But when things like that happen, it can really freak you out a little bit. When price action just moves sporadically and impulsively and violently. Okay, I'm going to have to kind of be careful here, because we really want the moving averages to be going up. You see how if you take a trend line break, you want the moving averages to be going up, but on the 10,000 tick chart. But on the lower time charts, they're going to be going down. It's going to oftentimes look bearish on the lower time charts when it's the best time to buy. So we always got to have our main chart looking good. I don't necessarily like it trapped in between. My favorite way to trade a trend line break is when it pulls back into the 20 EMA. The moving averages are all pointed up. That's my favorite way to trade. And a lot of times that's hard to find perfectly. We're in the danger zone now. All right. When it prices in here, it's caution. In between the 20 and 50 is caution. When it drops down below the 50, now when they cross, it's a sell signal. It becomes a sell signal. And a lot of times you can look at it like it could be a good opportunity to go long in a sell signal, but it's in the danger zone. It's in the danger zone, and it's become a sell signal. So in this case, there are opportunities because the 200 is still going up and price has not fallen below the 200 yet. Danger zone does not mean don't take a trade. It just means it requires a lot more experience and a lot more talent, a lot more wisdom, a lot more skill, okay? Because you might be able to get something. Sometimes price will bounce right there off that 200 EMA, right there, and you'll get a nice explosion to the top side. But at the same time, when it does, it'll be over the top of the 50 and the 20, and they'll be crossing up to the upside, and you'll get that kind of that look. The point I was trying to make is when price drops below these two, you have to be very, very careful. The best trend line breaks are when everything is going up. And this is why we call it the caution zone or danger zone. Caution zone. Be careful. It might continue down. It could reverse. We don't know. Danger zone is even more trepidatious. But again, until it breaks the 200 on the 10,000 tick chart and continues down, like this area was no trade for the long because it was under for the long. There's other strategies, but the trend line break moving average strategy you can't really use. You have to have multiple strategies in your toolbox if you want to take more trades. Some people use one strategy and only trade once a week or once a day. If you like to trade, you have to have multiple strategies. Okay, the more you trade, the more you have the opportunity to win, and you have the opportunity to lose. So some people say trade less, and I agree with that, especially when you're learning and you don't have one strategy mastered, which is I'm trading multiple strategies and I like to learn. I'm on a demo account, so I don't mind experimenting at this point, and that's what I'm doing because I think the best time to learn is on a demo account and you can try as many strategies as you want, and you don't have to worry about losing real money. Back to the moving average trend line strategy. Right now, we can't really take anything yet, but we're waiting. It's very nice to observe how deep these trend lines can go and how they can grind and grind. First, they'll go down at a certain speed, and then they can accelerate. On these accelerations, you saw we did have a positive win. Each trend line can be support for the grind. But once it starts hitting on top of the next trend line and grinding, it can go on for a while, but at some point it'll start to base out and round out. Watch the price activity. Where's it going down to using higher time charts? We're still in this fair value gap on the 10,000 tick chart. There's an order block sitting right down here as well. We're using 15-minute hourly charts, daily charts. You see, we got that reaction area, but it didn't make it go back up. Here's an order block sitting down here. It could come all the way back down to the 200 EMA. We don't know what price is going to do. We got to always come to the market thinking that we are going to let price tell us what it's going to do and not what we think it should do. Now remember, we've been analyzed over the last couple of months what happens when price drops below previous day's high. Go back and watch some of our videos. When price drops below previous day's high. When price drops below previous day's high, you see what price does on the next day. Keep that in mind. Even down here, when price had dropped below previous day's high, this didn't turn out to be a red candle. It's one of the few out of, I think, 1 out of 10 times. But it did continue down nonetheless. It didn't close red the next day, but it did have some drop into it. All we do know is that price has dropped below the previous day's high. That's all we know. Does not mean it won't go up and close strong today. It doesn't. But all we have is history to guide us. Let's let price tell us what it wants to do. I am still bullish until price starts heading down like this, underneath, closing underneath the 200 moving average, and these two cross one another and everything heads down below. I'm still bullish. You know, I just realized something. There is something in the middle. You don't have to be bullish or bearish. And, you know, I think I need to learn that. I think I need to learn that there's something called neutral. I don't have to be bullish or bearish. I can be neutral. And I think I need to start using that word more. When something's in the danger zone, there's still a chance that you could find a trade. Yeah, I understand that. I've caught trades off the 200 before, but I don't want to see these moving averages cross one another when that happens, right? I want to see these moving averages maintain their course and not cross. If price jumps straight down into this, sometimes that's the best reaction area to get a bounce. We saw that yesterday on the 60-minute chart. Price came way down, slammed into the 200 moving average, right? Let's take a look at that because that was amazing. We traded that. We were short on the way down because price had fallen below the 20 and 50 on the 60-minute chart. This is not the 10,000 tick. It's different, a little bit different, but it slammed right into 200 and we switched positions and started going long. So go check out that video. Our analysis and our patience to wait for trades to try to understand the direction of the markets, where it might have a reaction, is something that we're all still learning. So let's learn it together. We got 4 minutes until the bell opens. Price is going to start acting up real good here in a minute, and it looks like it's poised to go up, but we don't know what it's going to do. It's in the caution zone on a 10,000 tick. However, it's in an area, a reaction area, where it could definitely spring forward, upward, high. 15-minute chart, fair value gap right there off the 200 EMA. These have not crossed yet. Kind of what we're seeing on the 10,000 tick chart. Fair value gap. That's why I just like these charts better, the 10,000, the tick charts. And I'm getting ready to really think about a trade right here. It's crossed on the 2,000 tick chart. Let me check the 5,000 tick chart trend line. Yeah. It's getting ready to pop up over the top of that. And I'm going to go long.
Order filled.
We'll go long. We'll keep our stop within reason.
Order filled.
Okay, stopped out on that one. And and maybe I shouldn't have took it before the bell opens. I'm still learning myself. Yeah, look on the 5,000 tick chart. What looked like it was breaking out. Boy, you got to learn how to draw those better. I know I do. So yeah, that looks weak there. Maybe it's bouncing off of that one. It still looks like there's a chance this could bounce right here. The moving averages have not crossed. 20's going, the 200's going up, and that's the one I'm watching. Same thing with the 15-minute chart. It just ticked me out right there, and just ticked me out. So if it keeps going down right here and these moving averages cross and it goes below the 200, then we're not going to be looking for trend line breaks to the upside. We'll have to switch strategies. And you can see this behavior up and down, up and down. That green candle went up really, really strong. I think this is a buy right now, finally. Let's see what happens right here. It usually goes sideways. It grinds and grinds and bounces on top of...
Order filled.
It bounces on top of these moving averages, and then it goes sideways. And then it breaks, and that's usually the pattern. Right here on the 5,000 tick chart, I just didn't read it right. That's all there is to it, you know, and I shouldn't have got in before the bell opened, right? I should not have gotten in before the bell opened. That was my problem.
Order submitted.
Let's see if it hits second target. All right, hopefully it'll go up and hit second target. I need to put my stop on probably break even here in a minute.
Order submitted.
I have to learn to hold my trades, man. Look, there's a nice strong candle going on here on the 15-minute. That looks really good. It's getting up to a reaction area though, which is the moving average. Here's the 15-minute chart. But it might bolt right through it. Hopefully it'll keep going.
Order filled.
I'm going to take my second target profit up there. One of the reasons I'm getting out is just inexperience and being a novice and just not knowing any better probably, but I've had a couple of losses back to back, and I just want to, in that reaction area, it went up so fast, I just want to take profit and get back, basically back to neutral on my day. There's the 15-minute chart. I'm still learning, guys. I don't have it all figured out, but when I get that much that quick, I'm just going to take some profit off the table. There's probably some trades I should not have taken this morning. Probably that first one, and I would say the one right before the bell opened up, I should not have taken that one as well. So there's a couple that I just should not have taken. I'd be up, but right now I'm looking at a loss of $7 so far. And you can see why taking those profits when you need to take them. I would have been broke even on this trade. I would have put my stop on break even and it would have slammed me down for zero profit. Wow. All right, let's take a look at the activity again on. Let's notice these minute charts do help you understand just the nature of it as well. And I don't blame people for using minute charts. I use them too. This is the 15-minute chart. I like to glance at them. I like to look at them for sure. Look at this indecisiveness in the range of the caution and danger zone. This is an area you have to be very careful. Now, if it maintains this choppiness all day long, this will be a good price action for a strategy as long as it doesn't push low and continue low and trend low for our intraday swing trading. It thrives in like range type markets. So let's see if we can implement some of. All right, I'm going to use a risky strategy, my intraday swing strategy. I do believe it's going to be choppy and somewhat try to take out the highs. In fact, it did just take out the high. Over the daily chart again, we're back up over the top of the previous day's high in that area. It's toying around that area, I should say. It's back up over there. It's coming back down now. I'm going to give it this entire range as long as it makes higher lows. Okay, if it keeps making higher lows, then the strategy will probably be okay. Here on the 10,000 tick chart, if it makes higher lows, then the moving averages will stay intact. So if it pulls back into the caution zone, I'm looking to add to my position. I'll be looking to get out of the position if price starts to come down past the 200 moving average. So we're going to scale in and add to our position. And this is a good example to learn from because we're more or less buying at a high point. How does this strategy work when price goes against us? Where's the good places to add? And how do we manage our risk is all what we're going to learn on this trade right here. My limit on this particular trade strategy is $400. We don't want to lose more than $400 on this particular trade. And here's where the real test comes in right here, buddy boy. Now it's fallen back down to support levels. We're going to try to
Order filled.
Add one here. Now, the more we get, the more dangerous it gets. So we have to be very careful. But it came back down to that area where it could be making a higher low. And it also looks like it's bouncing off that 20 moving average or into the caution zone. Again, we will have to exit our position if it drops below and keeps pushing below the 200. Unfortunately, that's actually where a support level is. So I'm still trying to learn how to manage that area. I don't like having to get out and have it go right back up. But as long as we don't lose more than $400, we're going to be okay. That's the whole point here. Okay, so let's get ready to close out one of our positions.
Order submitted. Order filled.
Okay, you see how that works? Let me show you what we did here. What I did was I bounced it off of that level, came up to break even, and I got out of one. So what we're learning, if we get in high, we have to know where support level or reaction area is. And a reaction area is where we can scalp. This is reading the market as best as I can, okay? A reaction area is the caution zone where it's been chopping and bouncing off the 50 EMA. So I bought up here. When price came all the way down to that level, I added and I scalped out of one when it came to break even. Okay, so that was a break even trade on that particular one. Now my average price has moved around, but I marked my average price was up here. Ninja Trader does that, so I have to know where my original average price was. That would have been a great trend line break also, noticing how the price came back down to the caution zone. See, this is how I like it. If price comes down to the caution zone and springs right back up, there's a trend line break in there somewhere. And when we go to the 1000 tick chart, we can see the trend line break opportunity right here. Pretty nice. If we trust the higher time charts, then that's what we take right there, right? If we trust that the direction that we're going in, then that's what we take. What did that look like over here on the 2000 tick chart? Pretty good. Trend line break looked really good on both those charts. So I'm already in a trade, an intraday swing trade, so I didn't take that. Actually, I got in earlier than that, didn't I? I just took it based on the 10,000 tick caution zone uptrending 50 EMA and got in actually before the trend line break. You know, the lower the time charts, the more choppy and scary it can be. But look at the 5,000 tick chart, how it's just steadily trending upward. I like that a lot. And it really looks steadily on this too, but look at it's just so choppy on the lower time charts that it can spook us out. It looks like it wants to go over the top of the previous day high, and it looks like it wants to stay there, but we'll see. Something I got to stop doing is getting out of trades when I get back to break even, because I just get nervous of losing, right? I know it's a demo account, but I treat it like it's real money, and that's what you need to do. If you have a demo account, you better treat it like it's real money. If you don't treat it like it's real money, you're never going to become professional. But my problem is, you know, I just got back to break even, and I just got back on my demo account. Now all the trades and minus commissions and everything, all my fees, I'm down. I'm up to $4 positive. Not losing money is an important step for beginners. What I'm hoping here is that this will drop back down and give me a lower price, because I bought high and I added down here at the bottom and I scalped out of half, and then I made a profit on the rest of it here. And what I'm hoping is that it'll drop back down and then I can get back in. That's the reason why I want to do that. I want to reset my trade, because the way it's been rotating here, it should rotate down again. And when it does, I want to buy at that lower price. Okay, so it did pull back. We did get back in and at a better price. And if we add, we can add again when it comes down to those same levels. All right, here we go with the test. It's coming back down to that area. It did break the pivot structure. This could be putting in the higher low, or it could be changing to go down even lower. We have to be careful. Trying to say what the spot price is going to do is very tricky. I don't like to add unless I'm pretty confident in the area, and I think the next area to add would be literally down to, if it comes down really sharply to the 200, that'd be a great bounce add into this fair value gap area here where it already bounced once. So that would be an interesting add for me, but I can't really add before that, because now it's actually pushing below the 50 EMA and it's broke that pivot level. So that's a different kind of price action. So when it came down into this area and started to bounce up, I was interested. Now that it's pushing down below, I want it to go even lower. Okay, I added when it spiked down off that 200 EMA right there on the 10,000 tick chart, which is what we were saying. We'll see if it can come back up to the 20 EMA on the 1,000 tick chart, where we'll scalp out of some of that. Give us a little bit of a breather. I don't like to hold too much when it's going down. Just, you want to scalp out of it to get a lower price and a better entry, and then you can let it ride back up to the top. Adding too much too soon can be a big problem. Now this is where experience comes into handy here, because what we have is price pushing down, spiking down into the 200. It was going below, and even if it goes below and closes below and all that business, we have to notice that the 20 and the 50 EMA are not crossed yet. So there should be some kind of pullback reaction to that, unless it just goes down forever, right? And just straight down, bullet down. And that can happen. So we have to have our maximum $400 loss cannot be broken. If we notice that it's dropping at like a plane crash, kamikaze crash, and we hit that mark, we have to close the position. Number one rule, don't lose more than your daily maximum loss, ever. This is incredibly challenging because the moving averages have not crossed each other yet on the 10,000 tick chart, and its price is dangling below the 200. And the rule that I like to stick by is if price closes below the 200, you need to start thinking about not adding to your position. So what I can't do down here is add to my position unless I'm definitely going for the $400 limit loss, and that it happens quick when you're holding 3 micros. 2, you could still got a little bit of time and room to figure it out. And so I don't like to go too heavy too quickly. It's a good way to lose fast. I'd like to scalp out of one of these right here if it comes up in a little bit higher. That way I can have some freedom to, it's right where I added the one. So anything above that line right there will give us profit on the add. So I'm looking for some kind of move to the upside so I can get out of some of this. That'll give us over that 200 EMA on the 10,000 tick chart also. And just time and experience and not getting too nervous about what's taking place here. Just let it come up and get that, and hopefully it'll hit it, and we can be comfortable with holding one contract. It's hitting some, like when it gets up to these moving averages here, I definitely want to scalp out for sure. Hopefully it'll get up that high, and because that's a reaction area. A little bit higher would be nice, up to that 50 EMA, and that way we can get out of one of these. Let's see if it gets that far. Okay, I just closed everything out. I don't like how it's coming back around under the 200. It just may be head faking me out. There's going to be times when you cannot read the market, okay? And you don't have to lose your maximum loss. This is the second time that I have closed my position and not made myself lose maximum loss. It just may be that I need to step out and watch this price action, and don't take any trades right now, and wait and see what it does and learn from it by observation. Again, you have to treat your demo account like it's real money. You have to act like you're trading real money even if you're not. And unless you do, you're never going to become professional. When price crosses below the moving averages, the 50 and the 20 on the 60-minute chart, it's time to don't add to your position, but look for a way out of the long. We want to get action when it's going up. When price crosses below the 20 and the 50 on the 60-minute chart. So we lined that up with price crossing below the 200 and closing below the 200 on a 10,000 tick. So the 10,000 tick and the 15-minute or the 60-minute all line up perfectly. You see price action right here on the 5,000 consolidating below. It could bounce right here, sure could, but it's just dipped. This is a dip that I'll buy in, and we did. We added and we had a good trade and this and that. We're learning how to scalp in this area here. When it gets into this area, it's a completely different price action, right? So you see the trade ended up being like this. We bought a little bit lower, came down, bought. It just didn't bounce for us. Okay, we could have, we hoped that it would bounce here. It didn't. It started rotating around, and when it rotated around at this time right here, right here it was below those two, but it just wasn't. It's going back into it for a second time, you see. So the first time it drops down into something like the 200, these haven't crossed yet. First time, you should get some kind of reaction out of it. If it rolls back around a second time, that's way more dangerous, okay? Way more dangerous. On the 60-minute chart, when it slams down into the moving averages and even goes down, like it did right here, there's times when, like right here, slams down into it. It just keep an eye on it and watch it because it may bounce. But if it rolls back around, you got to just wait, try to get back in later or something because it's too risky. And don't forget, I should have always been kind of aware of this, that it had fallen below the previous high of day. It fell below. Look at it. Nice long pintail. This could easily turn red and come back down. So we don't want to try to be buying right now. And it may be that the whole day, ever since it's been in this area of the previous high of day, that when As soon as it falls below, I should have already been aware. I should have already been aware of that. And look, as soon as it fell below, I bought. If I had that as a rule, I would not have even done this. Or I could have simply just waited for it to come down here. Another strategy is to wait for it to come down below the 200 EMA when we have a bullish trend on the daily chart, right? Here's the daily chart. It's a bullish trend. Bullish trend. Well, it's technically it's sideways for a while now. The bullish trend is kind of stalling out, but more or less it's above the 20 EMA, and it might be a good strategy to wait for it to come down under the 200 EMA and look to buy. At least you're not holding something from way up here, from way up high, right? So that's an idea. All right, I'm taking another trade here where I think it looks like it wants to come back. Look at this pin tail on the 60 minutes. My stop is going to be underneath this pivot, because if it goes back down in this area and continues, for surely I want to be out of the trade. So this is under the pretense of understanding that that was a shakeout and that it's going to maintain a choppy sideways activity or go back up to the highs. If it does drop below, because we're already below the previous day's low, we don't want to be in this trade if it goes back lower than that pivot right there. All right, so that's going to be our stop out and probably our last trade for the day. All right, I have to get this on video. That was trade 8. We're back recording what's happened since I said all that, and we are into trade 13 now. And let's look at the 60-minute chart where I was saying if it goes back under that pivot, I need to be out. It did go back under that pivot, and I was toying around with the idea of increasing my stop loss, a very dangerous thing to say and think. Let me try to increase my stop loss. I remember doing that a while back, and I came to my senses and I said, no, let me get out of it. So it did bounce below that pivot, and it did a lot of chopping that I was thinking. So we were trading a lot of chop. It's just on this next move down, I got caught in it again. And I don't want to develop bad habits. The good habit is to cut the trade when you know you should cut it. So trade 7 and trade 12, both of these right here, I had to cut them, and they were the biggest losses of the day. Why did I cut them? Because the price is below the 20 and the 50 on the 60-minute chart. I can't compromise that. My problem today is that I was trading in a market that was too choppy. There might have been, it was bullish when we came in, and all throughout this time, right through here and all the way down, and right here I had to stop. And I did stop. That was trade 7 right here. Trade 7 was right here, and I stopped. And I did not just try to go into let's make it back mode right here. And I was almost break even again right into this area, and then it just slammed on me again, and it dipped below that pivot that I said was dangerous. Something that I don't know how I overlooked it. The 20 moving average had crossed under the 50 in this area. And when it was above the 200, I was chopping around, getting my money back, breaking even. And then when it broke below the 20 and the 50, you know, I should have realized something. And then over here in this area, the moving averages have crossed again. Very, very dangerous time to trade. So I am saying that I should not have been trading. And I guess the question is, where do I cut it off and where do I stop? That's what I'm going to meditate on. When should I have said this is not going to work? This is all good in this area, okay? And I did have a couple good trades in the beginning, but I started the intraday swing trading, which can work if the market's right, but it's very dangerous to go long when the market has the crossover right here. When these the 20 crosses over the 50, and it's toying around on a 60-minute chart underneath the 20 and the 50 EMA. That's something I want to make sure I understand on this video. When the crossover happens of the moving averages and the price drops below on the 60-minute chart, the 50 and the 20 EMA, and even when these moving averages are pointed down, you got to be real careful. I think I need to make my understanding here that when price drops down to the 200, it's okay to buy as long as these moving averages don't cross. And I said that on this video. Somehow I lost focus, and I didn't even pay attention to that they did cross or they're about to cross, you know, something like that. I guess when the second dip came down here, that's when I should have been like, okay, this is way too risky. But then it went up and I started making my money back, and I completely got sidetracked with breaking even and it was working. I got completely sidetracked with making my money back over here, and it was working well. And then it came down. I said, I'll just do that all over again. This whole trip up was good. I'll just do that again. And I forgot that the moving averages had crossed. It was just something. This has been a great learning experience. I'm going to watch this video several times to make sure I understand what went wrong. Okay, so today's a loss. I'm even in one more trade just to see if I can make anything back, which is probably nonsense. I'm just going to close it manually. There we go. It's closed. I hit the close button. I'm very, you get mad at yourself and you hate what you've done and you hope that you don't do it again. But I do see that I'm making some improvements in my mind, and that I'm getting real good at understanding that I need to get out. It's getting easier and easier to get out of a trade. So it is very difficult to get out of a trade sometimes. Oh, and you could say impossible until we make that personality change. And I've been really chopping away at that. I have been getting out of trades, did what I was supposed to do, at least when I caught myself in a situation that's the exact opposite of what I'm supposed to be in. Get out of the trade when you know you're supposed to get out. So what's good about this, though, is I'm recognizing more easily the danger zones for me, repetitious bad habits, and I'm able to get out of some trades when I know I'm supposed to. It's very difficult to get out of a trade sometimes when you think you're going to be right, and it's very, very challenging. So I'm getting better at that, actually. And this is the one thing that I'm going to have to overcome, is getting out of these trades when I know that they're going against me. I've been doing that a lot lately, right? Today's just been an over trading day. I need to go back and watch the video, all my trades, get into my mindset and understand why I did what I did and make adjustments. Okay, so we're down about $157 and it's under the $400 limit, and I'm happy about that.